equity analyst at Jefferies. Brent, welcome. So here's my issue, sort of, maybe you can address this about Uber. It seems to me like they're driver constrained a bit, right? Because they're not offering the subsidies that they used to. Gas is expensive, which isn't too exciting for a lot of drivers. And then for the riders, it seems like the value proposition is a little bit different because the rides are more expensive than they used to be. I find myself driving more often than I would have in the past. So it's like, do I want to pay that much for an Uber for a short trip? Maybe not. Why can they grow in this environment?
Hey, John, I think all those are very valid on top of regulatory, on top of the food business slowing. There's a huge wall of worry. This is the single worst sentiment of all of internet. The stock trades at 1.7 times revenue. It is no doubt one of the worst overall, subgroups. Lyft stock is down even more. So overall excitement for this category is way down. I think what's starting to turn is like we're starting to go back to normal. We're starting to go back to work more in using Uber. We're obviously Europe was booming. I was in Europe with my family, and it was really hard to find Ubers. We used the Lime scooters and bikes more than we did the cars, and that is in a partnership with Uber, which helped with mobility. So I think overall you have a rebound in overall vacations. You have a rebound in normal back to work. And we think the sentiment is completely washed out. This is, make no mistake, this is not our favorite name. This is one of the names I think is just totally washed out and should be able to clear a 32% bookings comp for the quarter based on the demand trends that we see so far. So, for me, it's a short-term trade. I think ultimately there's better stories in our tech coverage than this story. The sentiment's awful.
So it sounds like people should be really careful. And beneath that, I wonder, what are the conditions that drive profitable growth for Uber? In the beginning, it was just kind of expansion on the map, right? And they had lots of cash from investors that were helping them to fund that just top line growth. And then, the pandemic actually helped them with Eats, but those are also unusual conditions. So from here, how do they grow profitably at high quality with a quality experience for both drivers and riders and eaters?
I think, as we say in tech platforms win and point solutions die, and they become a platform. They're doing multiple things for the consumer that they're able to leverage. When you think about what's happening with food, with delivery, with transporting, us from point A to point B, there's economies of scale. I think they've gotten much more conscious about spending. Like the rest of tech, they've been a lot more careful where they're spending money. They're pulling out of markets that don't make sense, and they're going harder in markets that do make sense. And yeah, look, there aren't a lot of markets. I mean, I got off the flight in Santorini, and it said Uber's in Santorini. And I was like, wow, it seems like a small market for Uber to be in. Why wouldn't they just let the local taxis take over there? But I think, they're making harder decisions, and I think that's good. And I think, Dara's making the right call, and they're putting in the right initiatives in.
If point solutions die, what does that say about, say, Lyft and DoorDash, which also have earnings coming up? Lyft, one could argue, is Uber without the international play and without the food, but Dash is really trying to diversify within delivery outside of just restaurant delivery. I mean, are they point solutions? Are they different?
Lyft is. I mean, Lyft is U.S. only, nothing else, right? That's it, and you nailed it. So that's the challenge that we have with Lyft. We don't have a buy on Lyft. And in our view is they need a partner or some strategic to figure out how they diversify their business, because there is no diversification. Uber is incredibly diversified. If you open up the Uber app, it's almost too confusing. There's so many things you can do on the Uber app now. So I think, to your point, Lyft is a point solution. Uber is a platform. And then when we look at DoorDash, I don't formally cover it, but I'm completely addicted to the service. And I think many have been addicted during the pandemic, that it is their de facto way they go about getting food delivered. So DoorDash is a formidable threat to Uber. There's no question.
All right.
I think it's very well run, and they have, in my opinion, still the #1 app for food.
Brent Thill with a good perspective as we await earnings on Uber and others. Thank you. And don't miss.